as real estate investors, we're here to solve a problem. We're not here to go ahead and milk his money. I think a lot of people think investors are there just to scam people because they're trying to lowball them. That's not the point. The point is you want to get out of a situation, and I'm here to help you. So let's work something out to make it work. Found out that he owes about $180,000 left on the property. Okay, great. I make sure that I'm not going to go anything lower. And we asked him what his underlying number is. And he told us, because his reason why was he wants to scale down. And that was his main reason. And he's just really exhausted. He's a self-managed guy. He manages 400 doors himself, which is insane. So, and you could see his properties are just not well taken care of, because you can't even hit one property a day and he still can't do all of it. So that we understood, and we kept in contact with him. So long story short, it's worth it. Sometimes it's worth it to wait.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here is your host, Anette, Talie.
Welcome to another episode of Deal Closers. I am your host, Anette, Talie, and my guest today is Doris Ng. Welcome, Doris.
Thank you.
I'm very excited to have you on the show. I connected with her at a conference, a virtual event, and I was very impressed with your story. She invests with her sister, and it was such an amazing story that they told us at this panel. So I couldn't wait to invite you to the show. So let me tell everybody a little bit about you. Doris is the managing partner at Two Savvy Sisters, a real estate investment company started with her sister Alice. Doris has been investing in real estate since 2012 in both residential and commercial multifamily. Her experience has led her to form partnerships with experienced real estate professionals and trusted advisors. Currently, Two Savvy Sister Investments owns a passively invest in over 350 units across multiple states. Wow.
Thank you.
Very impressed. So, Doris, tell me, how did you get into real estate? How did you start?
Well, funny, I think a lot of us have many different inspirational stories that allow us to start real estate. I started as an entrepreneur back right after college. So I really never really held a position. So I started a restaurant 14 years ago when I came out of college. And I guess sometimes ignorance is bliss, because I knew nothing about the industry, nothing about business ownership. And we started it and built it and developed a really awesome team. We had up to about 65 employees. Everything really went really well in the business. We were able to scale it. And one of the inspirational results that drove us to get into real estate was when we scaled the business, we realized that we kind of got bored. My sister, who's also my partner, Alice, she's very visionary, and she thought of the idea of real estate. Why don't we get into real estate? Because it could help us with our retirement. We didn't have a 401k when you own your own business, because it can get kind of pricey. So we decided to invest our profits into real estate at that time. And we bought our very first single family home in 2012. So fast forward, 8 years into it, we realized that the last couple of years, we realized that, growing a portfolio of single family and smaller units is great, but it wasn't efficient enough. And we always wanted to go ahead and really scale up on real estate, but we didn't know how. We see other associates of ours that could grow so quickly, and we were just wondering how they can get to that. So 2 years ago, we were able to just really focus a lot of our energy onto the multifamily. We sold a lot of our underperforming smaller units to really divest back into the multifamily space. So really it's kind of starting all over again at that point. And so we had tremendous success on doing that. We met a lot of valuable people such as yourself through a lot of different events and different courses that we took to really kind of understand that whole space. Real estate, it's basically uniformly across the same on many different levels. But when it comes to multifamily, there's certain things that you just have to kind of watch out for a little bit. So we really studied that a lot the last couple of years. And then from there, we're able to dive into many different states and leverage the help of other folks that are a lot more experienced on certain levels while we add in our value as well. Mm-hmm.
That's awesome. And you touch on something that is very important. Like, you can get a lot of information for free online. And I think everybody should start there until you kind of find what you like and you want to do. But once you know what you want to do, you got to really get educated, because you don't want to make mistakes that could cost you a lot of money.
Yeah, and one of the first things we did in real estate is we made a lot of mistakes. We bought retail price for a lot of our properties because we didn't know. We just figured that the MLS is the only way to go when it comes to buying properties, and that's exactly what we did. It wasn't bad, but again, it wasn't efficient. We really wanted our dollar to work hard for us, but during that time, we were working for the dollar, if that makes sense. And so we just grew it very, very organically. Again, not a bad thing to do, but again, if you really want to scale up and use that as a legacy and a retirement, that's probably going to take you much longer than just signing up for a 401k. So we really needed to find another solution to actually make our dollar work a little bit harder. And that's when, like you said, the education came through. A lot of information is built online, and you can get all of the resources. It's just coming up with a special niche group that you could actually associate with and work with, because real estate, there's so many different ways of making money. There's hard money that you could lend out. There's just wholesaling. There's just a ton of them. And when you get into the real estate space, you're really overwhelmed by it. And I think that's what happened to us. We just didn't really know. So we just dived into every little thing. We've done fix and flips. We've done, the rehabs of it. We've done wholesaling and all of that stuff. And at the end of the day, we found out that buy and holds were really our strategy because of our purpose of why we got into real estate.
Absolutely.
The Deal.
All right. So let's talk about the deal. What deal do you want to talk about today?
Sure. So early this year, we acquired a 6-unit in Wisconsin. So that was a deal that we've been working on for a very long time. So it really encompasses a lot of moving parts on this particular deal. And how we found this deal was driving for dollars, really. And what driving for dollars means is you're literally driving around and seeing what properties that you're interested in that could bring a little bit of value, that you could drive some value adds to it. So we actually had an 11 unit that we were interested in, and thankfully we got overbidded on that 11 unit, and right next door to the 11 unit was a 6 unit. So we looked at it, we saw that we could bring a lot of value to it. It was in a great neighborhood, and we decided to call the owner. Now the owner did not answer or did not return my call for about a month, because he was an older gentleman, and phone calls and emails just wasn't his thing. So he didn't really check it much. And we also sent him a letter. And then finally, he, out of the blue, he just texted me and said he does want to sell his 6 unit. Let's go ahead and discuss. So we spent some time to discuss on how we did it. He was very interested in selling because he had 400 doors at the time, and he was trying to bring it down to 100 just for lifestyle purposes. So he came in at the right time, and that's why it's really important for you to do that follow-up. Now, what happened was everything, the PSA, everything got submitted in. We were ready to go ahead and lock down for it. And then about a month before we were supposed to close, I had the earnest money, everything in. He calls me back and tells me he's not selling the property.
Oh, no.
So typically it doesn't work this way with the seller and the buyers. It usually is the buyers that have cold feet, but the seller himself, he had cold feet and said, I'm sorry, I'm not selling. I am willing to pay for all the legal fees that happen on this whole thing, but I'm not selling it. And I asked him why, what can we do to go ahead and help out? He just basically over depreciated on his properties, and he'll be paying a heavy, heavy tax gain. I offered even doing seller financing, whatever it may be, and he just opted out for it. So long story short, we waited for about another almost a year to do this, but we were very adamant. We kept in touch with him. We sent him Christmas cards. We sent him all of that just to be top of mind. And again, this is why relationship is really important, because had we given up, it wouldn't have worked. So November of 2019, I shot him another text, and he's a fax guy. He doesn't email. So I had to open up a fax line, an online fax line, to accommodate him because I knew he had 400 doors. So we texted him and we faxed him and said, hey, what's going on? Do you have anything coming up? I would love the opportunity to work with you on that 6th unit again, or any other properties that you have. Shot me a text right away and said, yes, I actually do. The 6th unit that you saw a year ago, I want to sell it. But the problem is I'm doing a 1031 exchange and I need you to close it in 3 weeks. Can you do that? So that was the challenge. And of course, I asked him, is the deal still on from a year ago? Is the offer price still the same? If that remains, I will go ahead and close out for you a year later. I'll go ahead and let's keep the same price. I'll close in 3 weeks for you. So he said, yep, let's keep it at the same price and let's close in January when I can go ahead and do my 1031. So we were able to go ahead and wrap it up and close that deal. During the midst of it, we were trying to get financing for it, and the banks just couldn't do it in time. And they said, 3 weeks to close, that's going to be very difficult, girls, because they need to get an appraisal and, the whole thing. So, of course, we had to resort over to our private money sector, which was the people that we built relationships with. And we were able to close cash on the deal with a little bit of private money plus our own. And again, that successfully closed January early this year. So
okay, hold on a second. For the people that don't know, so what's private money?
Good question. So private money is essentially money that you take in privately, maybe your friends and family, people that you know fairly well, that is able to go ahead and lend you the money at an interest that you both agree on. So for us, we developed a very good network of individuals. We were entrepreneurs in the very beginning, so most of our contacts or connections are entrepreneurials. And because entrepreneurs generally have pretty good cash flow, but they don't have time. So we offered to go ahead and help them invest their money by lending it to us to acquire this property. So once we get it completely done, then we go ahead and we pay them back the principal plus the interest. So it's an easy money for them to go ahead and earn without lifting a pinky, really. And it helps me out because I'm able to close on the deal and get it done. So we're in the process.
How long do you normally do these loans?
The loans with private money is really shared between you and your private money investor. We generally like to stay within 6 to 12 months. Is our time frame. Anything over 12 months, it can get a little bit difficult for them to agree to lend you the money, just because a lot of them are just liquid and they probably need it for something else for them. But that's our how we run it. And right now we're in the process of refinancing that 6th unit. It's actually it works out really well because we had about $100,000 in equity with the whole refinance, so we're able to cash out with little to no money into the deal. For us.
That's amazing.
Yeah.
All right, so let's back it up a little bit. And that one you founded with Driving for Dollars, right? And you said that you mentioned the seller financing. So what was the reason he didn't, or did he share the reason he didn't want to do seller financing?
Initially, he didn't want to sell it to us because he over depreciated. So I offer seller financing, meaning that you'll pay less taxes. What it means when he over depreciates is that if I bought the property from him, now he's going to have to pay this capital gain tax that he doesn't want to pay. So in order to avoid that or to minimize that, we offered seller financing for him. And generally, I would be okay offering at a higher price. And he declined on that because he still felt like he had to pay capital gains, which is very true. You still have to pay a little bit. And so I backed out of the deal. If you're not okay, I'm fine with it too. But we just were persistent, that we kept in touch. And then finally, he had to do a 1031. And we knew 1031 deals generally won't do seller financing because he needs to sell me that. I need to buy that property, so he takes the capital and then buys that new property. So we knew the only way to get that deal, that property, was to get private money and like do cash basically for him and close it at a reasonable time. Otherwise, he knew he could have gotten the property for about $30,000 more. And going into it, the appraised value was, we bought it for $30,000 in equity already. So we knew that coming in, we already have a pretty good stance on it. And now backing it up to the private money, we're able to go ahead and close and all that. So now we're doing the rehab for it, and we have a different strategy in how we build up what we call the net operating income to increase that, so it makes the value of the multifamily worth more. So we are expected to have $100,000 in equity once we get the CapEx stuff done to the property as well as we want to, and then we're able to return the money back to our private investors so they could have the interest plus the principal that they earned. And then we're happy because we put little to no money into the 6th unit, and we have a healthy cash flowing 6th unit coming in. So super ecstatic about that. And again, this drives into many, many different things because our relationship with different lenders, the private money sector, and the seller. So it's really, really important that you develop those, because had one of them not fit in, I think we would have lost a deal on it.
Right. And so tell me about the numbers now. So how did you gain this $70,000 in equity with the rehab? How much did you spend on the rehab, and how did that increase the value of the property?
Sure. So we bought the 6th unit for $235,000. Going into it, again, we knew the area really well because we had surrounding properties around there. So again, it's very important to invest in areas that you're familiar with.
Know your market, right?
Yeah, really have to hone in. That market is only a 10-mile radius. It's not even that big, but you have to know it, because the minute he said he's going to sell, we knew we had to jump in. There was no realtor involved. So we knew that the property's worth at least in the 270 range. And this is as is. And he wasn't very good about keeping his properties because, again, driving for dollars, I saw that the property needed a lot of TLC in it. So with the rehab, what we're doing is we're doing a couple of different things. We like to always do with exterior work. That's number one, because appraisers really look at that. It's a visual thing. And so we are fixing up the parking lot. We are trimming down some of the mature trees that makes the house look too covered, and we're also really just keeping the landscape. So that's already a big plus on that. And because all units are occupied right now, and they're about $100 less than market rent. So we're actually, once the whole COVID thing lifts, then we're automatically adding in the market rents to where it needs to be, without really, I guess in Wisconsin, it doesn't matter. You could just increase rent as you need to. And he didn't add any pet fees. So we have a couple units that have pets in it. So we're going to really right away drive that already. So that's increasing that. And then we're converting half of our units to corporate housing. So corporate housing is an extension of short-term housing, which a lot of people know about. The only difference with corporate housing is that it's corporate companies coming in, and they're basically renting out for a time frame, 6 months, 3 months, 2 months. And we're able to almost double the rent, not by doing a whole lot. We furnish it and we pay for the utilities. We built that all into the rent, but you can almost 2 times the rent that you normally get. So we're going to be converting 3 of our units to go ahead and support that, to drive the NOI up. Now this property is cash flowing about 12% cash on cash. And then once we convert it over to where 3 units become corporate housing, we're probably driving up at a close to 15% cash on cash on the deal. And but being that we didn't put any money in, or very little of it, we are 100% cash on cash at that point. So we really don't care. Not saying we don't care, but we're really happy with whatever we can get from cash flow. So this property is supposed to be worth, after that, just a little bit under $400,000, roughly sitting at the 360 is what we're allocating to do. And then we'll refinance it after 2 years for that.
Awesome. That is amazing. So, when you found the property, how did you negotiate it? Was he already at the $235,000 price, or did you have to negotiate with him? Who offered first?
We always ask the seller what number they like to sit at. Okay, that's really important to ask, and then also to find out how much, if they owe any money on the property, how much, because at least you can't go anything lower than that. So we found out that he still has some money there, but he's a very savvy investor. So he normally likes to take money out. He likes to refi the properties out right away. He only keeps a certain percentage in it. And we had asked him if we were to do seller financing with him, can he pay off the whole note and then we just pay him? And he's like, yeah, I could totally do that if I wanted to. So we knew that he was very savvy with it. He was asking in the 245 at first. And we still knew that the 245 was still a good deal, considering what the rent rolls were going for, considering that it was always 100% occupied. We weren't really concerned about that. We were talking with our coach and just making sure, can we get anything lower? So of course, we kept on going back and forth, and he said, finally, you know what, let's settle at the 235, but that means that you guys will be paying, there's no seller financing on it. And we said, that's fine, we'll go ahead and do that. The biggest thing we gave him in the very beginning, our very first meeting, was we gave him 2 LOIs, 2 letter of intents. Option 1, seller financing. Option 2 is cash. So basically, it doesn't even allow him to think, do you want to sell the property to me? Is you're selling it. It's just, you want A or B. So it gives the notion of just pick your choice, don't think. And he ended up initially doing the seller financing, but again, he had cold feet, so that didn't work out. And then we jumped back over to the financing. He didn't want that. Fast forward a year later, he was okay with the financing or the cash side of it because he had a 1031. So it's just, you have to be open to think about different options with the seller, because as real estate investors, we're here to solve a problem. We're not here to go ahead and milk his money. I think a lot of people think investors are there just to scam people because they're trying to lowball them. That's not the point. The point is, you want to get out of a situation, and I'm here to help you. So let's work something out to make it work. Found out that he owes about $180,000 left on the property. Okay, great. I make sure that I'm not going to go anything lower. And we asked him what his underlying number is. And he told us, because his reason why was he wants to scale down. And that was his main reason. And he's just really exhausted. He's a self-managed guy. He manages 400 doors himself, which is insane. So, and you could see his properties are just not well taken care of, because you can't even hit one property a day and he still can't do all of it. So that we understood, and we kept in contact with him. So long story short, it's worth it. Sometimes it's worth it to wait.
It was really worth it. So what difference did you do on the LOI? It's so funny because I did that with a property that I was pursuing here in Florida, and my realtor at the time was like, what are you trying to do? Why do you want to do 2 LOIs? I'm like, just do it. Just do it. And they didn't take either. But my realtor was like questioning it, because I remember hearing that strategy somewhere else. And obviously it worked for you. You didn't give him the option to not sell. You just gave him the option, either seller financing or cash. Yeah. And what was the difference between those 2 offers?
It was roughly about a $10,000 difference. But how we structure a lot of our seller financing deals are, we always include interest-only payments for the first year. So pricing to us is not that big of a deal. If a seller is asking for premium pricing, we learn that that's fine. What can we build out of this? So, if you want the 245, I'm fine paying it, but on my terms now. So we would let them know, great, the 245, but I want the first 3 years to be interest-only payments. So it allows me to go ahead and have some extra room to have mistakes and not worry about it. And then have a balloon time. We like to sit in at a 10-year balloon, because I want to give ourselves ample time to do the refinance with the bank. So it gives us that wiggle room to say, if the recession, like right now, coronavirus is hitting, I don't want to be forced to go into a refinance with the bank right away, knowing that a lot of lenders are cutting off lending. So that if that were to happen, we would have given the property potentially back to him, if that makes sense. So that's why it's really important for us that when we do it, we factor in so many different avenues of, okay, great, that is your well-to-do sitting price. I'm going to go ahead and work everything on my terms. If that works, then great. I'll ask for a lower interest sometimes. I'll say, the banks right now are lending at 4%. Your money market account is giving you a 1%, maybe not even, I'll sit in right between. I'll just do maybe a 3.5%. You're still making money. All of us are making. You're getting your premium dollar that you wanted. I'm still giving you interest on top of that. And if things don't go well, you get a brand new property essentially because I fixed everything up and it's going back to you. So I think you have nothing to lose and everything to gain. And that's why he was okay. We actually have a 42 unit that we verbally agreed on with him to do a seller carry or seller finance, but he just needs to agree. So again, this has been a work in progress for a couple of years now. So he said, don't worry, the last time we spoke to him 2 months ago, I am considering selling that 42 unit. And we said, yes, please. So it is going to be a work in progress to make sure. Yeah.
That's an awesome story, because you gave him the options, and like you said, you created a win-win situation.
Yeah.
And at the beginning, when he got cold feet and decided not to sell, did he ended up paying your legal fees and your expenses?
Yeah, he was okay doing that. Yeah.
Okay.
We gave him again, we always give options. We said, okay, either one, you pay for all the legal fees that happened, or show us another property you want to sell. He wanted to offload a lot. He had to I have an 8 unit, I have this, show me all of that. Let's go ahead and do that. Give me a couple options here. I don't want to just end it. But if you have other property, he said, yeah, I do have other properties I want to offload. So let's go ahead and get this thing figured out. So the challenging part is, with any other investor, he had no time because he was busy self-managing his properties. So getting him to visit with us on the property was so difficult. And again, he doesn't email. So we had to conform to his standard of communication, which is faxing. So I had a fax every so often. I had to send him a fax to say, hey, what's going on? How are things going? And the fact that we're able to stay true to him, what he prefers and why he's doing it, it really helped us get that deal. So we're slowly trying to offload as much as his deals as possible. So
that's amazing, and I hope that he agrees soon to the 42 unit.
Expert tips.
All right, so now is the part of the show where you're going to give me 3 expert tips. And Doris is going to give us 3 expert tips on relationships.
Yeah. Kind of exactly how the story panned out. It's really important for you to develop relationships with everybody that you meet, whether you bring more value to them or they bring more value to you. Is just really important. The minute you connect with somebody is really important to build that relationship. So the first thing is obviously follow up. It's really important when you have a relationship with somebody. It's not just to say, hi, we met for the first time, and then you kind of go silent until you need something from them. That's typically how it works for a lot of us, including myself, that I'm trying to improve on. So building that constant relationship, if you have a really good feeling with this individual and you really want to build that connection with them, you really do need to take the time. And now is the best time because of coronavirus. We're all at home. So you really have no other excuse but to say, I'm going to go down my phone and pick someone I can chat with and catch up with, because it's been so long. And I've done so much the last couple of months. I'm easily talking over 4,000 minutes a month. And it's just insane. I'm not used to that. And it's good to reconnect with a lot of friends and family that you kind of forgot, you put in the back burner. So that's very important, because you may never know how we acquired the 6th unit. The other one is value add. A lot of us, like I mentioned before, we only connect with somebody because we need something. And although that is great, but you need to also understand that you need to bring value to somebody before you grab something from them wholeheartedly. It's just very difficult for you to say, hey, Annette, I need this from you. Can you help me do this? When you and I didn't really develop a relationship, it's just really hard for you to go all in and support me versus me. What can I do for you today in hopes, well, maybe it won't happen, but what can I do today to drive value to you so you could appreciate me and think of me in the next time, we come across. So again, that's really important to go ahead and really, really have that as a habit, I guess, to really drive that value to others. And the third is really integrity. And when it comes down to integrity, it's really important to be practicing or saying what you're practicing or practicing what you preach, however you say that. Because my sister and I, when we have a property under contract, for example, we are 100% closers. When we say, I'm going to close on a property and buy something from you, you have our word that we're going to close. It's really, really disappointing sometimes when somebody says, I'm going to buy from you, and all of a sudden they just kind of drop off because you don't have that skill, credibility. You don't have any of that. That makes it very hard for someone to trust you. I'm going to use another example. We acquired another property last year, and it was from a wholesaler. I don't know, have you ever done any wholesale deals before, buying from a wholesaler? But a lot of times they do proof of purchase, that they say, if you're going to buy this property, I need you to show me that you have the money in your bank to go ahead and buy it. Well, Alice and I, we don't. We always say, I'm going to buy it, I'll close next week on it. And they said, okay, great. So we developed that relationship where we don't have to show proof of funds on it, which is great. And on top of that, that wholesaler gave the property to Alice and I, or decided to sell it to us, and we're not the highest bidder. We were probably about a $5,000, I think, less than what the other bidder bid. But because of the relationship and longevity and the guarantee to close, the seller, the wholesaler said, I'm not going to deal with that person. I don't know if they can close. I'm just going to work with you girls. I know that I can close next week with you. So therefore, I'm going to sell it to you. So it's a win-win for a lot of people. And we have another 10 unit under contract right now from another wholesaler. Exact same thing. It was a $20,000 difference that we under offered, and they're giving it to us. So a huge thing that you have to understand when it comes down to integrity is you need to really own what you say a lot of times, because people know that and they feel it. So I think that's pretty much it.
Awesome advice. And I totally agree with you. I sometimes cringe at people negotiate on something when they are not ready to buy. Because if you're not ready to buy, then you may back out, and then you're not going to look good. Like if you are negotiating, like you have to be ready to, if you agree on a price, to do it.
Yeah.
Right? So definitely amazing story. And you are the living proof that you are doing what you are preaching, because, you're following up and you're creating these amazing relationships that are paying off at the end.
Yeah. Thank you. And it's a lot of fun. And, when you're in the game of real estate, there's so many moving parts. And if you enjoy every one of those parts, it's amazing. And you don't even feel like it is a job. And now we're building wealth, and we're also building legacy, what we wanted to do in this game of real estate, that along the way you get to meet some phenomenal people like yourself. And it's just amazing to kind of see yourself grow and others grow in that aspect too.
Absolutely. Thank you so much for being on the show. So how can people find you online if they want to connect with you?
Yeah, we are on Instagram. Our handle is 2 Savvy Sisters, and it's the number 2 Savvy Sisters. A quick story about our name. We came up with the name because we were not savvy. And every single time now when we think of different ideas, we always say, is that savvy enough? Is that savvy enough? Can we go ahead and challenge ourselves to be a little bit more productive and efficient with what we're doing? And because of that, it just resonated with us really well. So here you have it, the name. Find us on Instagram. I am on Facebook as well. Doris Ng is, you could easily look me up if you did Doris Ng Wisconsin. I think I'm the only one in Wisconsin. It's not difficult to look me up as well. I'd love to connect with more people and kind of share experiences, just because I still have a lot to learn in this game of real estate, and I'd love to go ahead and learn from many of you. At the same time, if there's any other value that I can drive, I'll be more than happy to share a lot of our resources as well.
Awesome. Thank you so much. And if you are enjoying this podcast or any of the other episodes, please subscribe, like, share, and also leave us a 5-star review if you're enjoying and learning something from this podcast. It really helps our podcast go to more listeners. So thank you for that. And we'll see you next time. Bye.
Bye.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.